Hello everyone, this is Jay, and in today's video I wanted to review two of my subscribers' comments. One of the comments is a suggestion on a new ETF that I wanted to review all together with everyone. And then another one is an opinion on one of my holdings, which is awesome to hear and see or read any opinions that you guys have. One of the reasons why I created this channel was to, of course, record the journey of growing this dividend portfolio and see how it grows, but also to have people that I can talk to, just because I have no one around me that I can talk to about any investing ideas or anything about investments, pretty much, to be honest. So I really appreciate everyone's comments. But before we start, please don't forget to hit that like button. I really appreciate how the channel is growing. And it continues to grow, which is awesome. It's keeping me very, very motivated together with your comments. So here it is, my portfolio. These are all of my holdings right here. I still have Stag. I haven't sold it yet. I have not updated it. So you guys will be the first ones to know when I sell Stag. I will definitely take some screenshots of my sale and then my purchases. But we're not here for that. Let's go into my updates tab. And here it is. The first comment that I wanted to review is from Legendary Geek, which is one of the subscribers that is very, very active. I hope you don't mind, Legendary, for putting your comment right here. And I hope anyone doesn't mind that I like to review the comments. So in this comment, your portfolio is looking good. I really appreciate it, Legendary. There is a new ETF out that was introduced on 11/3. You may want to keep an eye on it as a dividend investor. It's an ETF by Roundhill, and the ticker symbol is KNGS. It focuses on Dividend Kings and has a 0.35% expense ratio. Dividends will be paid out quarterly for now. Since it is new, I have not bought any yet, but I am definitely going to keep an eye on it. Just figure you may want to put in your on your watch list, which is awesome. I really took your consideration, Legendary, and I really wanted to take a look. I opened up already their website, which is right here. Ticker symbol is KNGS if you want to look into it. And it's the Dividend Monarchs ETF. All right, so right here it shows the top 5 holdings, which is Leggett & Platt, 3M, Federal, BH Black Hills, Stanley Black & Decker. We're going to go into the top 10 holdings in a few, but let's take a look at the overview of this ETF. The Roundhill S&P Dividend Monarchs ETF is the first ever US listed ETF to track the performance of dividend monarchs, an elite group of US blue chip companies that have grown their dividends for 50 plus consecutive years. Wow, that's definitely awesome. I'm guessing this is like some of the requirements or descriptions of it, the 50 plus consecutive years of dividend growth, 3.51% dividend yield for the S&P Dividend Monarchs. And right here it says 0.78 beta of the S&P Dividend Monarchs. The investment strategy, which is right here, the Roundhill S&P Dividend Monarchs ETF, the fund, seeks to track the performance before fees and expenses of the S&P Dividend Monarchs Index. So it looks like they grab some of the holdings from the S&P 500, whichever ones are the Dividend Kings, and those are their holdings. So right here in the fund details, of course, the launch, it started on 11/2 on November 2nd. So it started, what, like a week and a half ago, I think it was. So it's fairly new. Number of holdings is only 36, so it doesn't have that many holdings. But if it has Dividend Kings in their portfolio, it sounds very, very good. The expense ratio is 0.35%, which, if I'm not mistaken, for every $10,000 you have, you pay $35 a year. So you guys can correct me if I'm wrong, but I believe that's the math for that. And assets under management, only $1 million. Shares outstanding, 40,000 shares right now. So, of course, there's no distribution information. They will pay quarterly, it looks like. This is when they're going to be paying their distribution history, it looks like. So it looks like if you start buying them now, your first payment will be at the end of the year on December 29, and it looks like they'll be paying quarterly every end of the month. So they will pay in March, June, September, and December at the end of the month, it looks like. So if this is something that you are considering, just do your research and look into it. Let's take a look at the holdings. They are right here. So their holdings are Triple M, of course, very, very popular. Federal Realty Investment, FRT, not sure, I'm not knowledgeable about that one. Black Hills Corp, BKH. Leggett and Platt, another popular one, ticker symbol LEG. Stanley Black & Decker, very popular one too. They make tools pretty much. Ticker symbol is SWK. Kimberly Clark, KMB. Sonoco Products, I would think this is it. Ticker symbol SON. Target, very popular one, TGT, which is on a dip right now if I'm not mistaken. Kenvue Inc., KVUE, this is the spin-off from J&J. I'm curious how this one makes it there since their IPO was recently. But I'm not sure. I don't know why this one is here, but it's definitely one of my holdings. And it's a newer company, but it is the spin-off from J&J, so I'm guessing they got the information from J&J. And then the last one on the top 10 is AbbVie, which is from the healthcare sector, ABBV. You can definitely, if you go into their website, you can click a view all, and you can definitely look at more. They have Coca-Cola, PepsiCo, Hormel Foods. It is one of the recent popular ones too. A lot of people are liking Hormel. Ticker symbol is HRL, if you want to take a look at it and do your research. J&J, of course, very popular one, and one of my holdings, which I like a lot. Colgate-Palmolive, ticker symbol CL, sorry. Genuine Parts Co., SJW Group, Procter & Gamble. Wow, only 2.54% of the holdings here. I think I would have put it in the top 10. I don't know. Do you guys agree with me? I would have put Procter & Gamble at the top 10, and probably J&J also. Not because they're my holdings, but I do believe that they are doing very, very good. So right here, you guys can see all of these companies. Abbott Labs, one of the popular ones right now too. Ticker symbol ABT. So many of these companies right here. Granger, GWW, Dickinson, something like that. BDX, MSA Safety. So there's definitely a lot of companies here that are very, very interesting. Let's go into Seeking Alpha right here, which I'm not affiliated, but I do use their website to look at stocks and ETFs. So it looks like it started at $25.60, and right now it is at $25.30. So it's still around the $25 price. It has not dipped or gone up anywhere, so it is still around that range. Right here, assets under management, 1.01 million in assets under management. The expense ratio, as it was said before, 0.35. The fund profile is pretty much going to say the same thing. Right here, something new that I did not see on the other one. The fund invests at least 80% of its total assets in the common stock and real estate investment trusts, REITs, comprising the index. I did not see, well, I guess I didn't know some of the companies that they had on there, but they probably have some REITs also. So you'll probably get qualified dividends, non-qualified. The expense ratio 0.35. There's really no other information here, but you guys can keep an eye on it. You guys can definitely take a look at this one, recommended by Legendary. I do think I want to keep an eye on it also, just to see how it performs in the next year or two, and see how it goes with the dividend. Hopefully it has some dividend growth that can make up for that higher expense ratio. I would expect for it to be at least at a higher dividend yield than SCHD for me to pretty much add this one to my portfolio, and that's only my opinion. It might perform very well. It might have like very, very good dividend growth also, since especially is going to hold Dividend Kings. So it will be good to keep an eye on it. So let's take a look. So I really, really appreciate your comment, Legendary, and I hope you don't mind I put you in the video. My next comment was a very detailed one, and it was from Randy's, one of the my subscribers, also always very active, always he's always very detailed on the comments, which is awesome. I really like replying back to his comments and reading his comments, and I encourage you guys to also read his comments. So the comment started with, it sounds like you have a good plan with Stagwell and O transfer. If you guys don't know my plan, you guys can look at my last video that I just posted on Sunday, and towards the end I shared a plan that I have with Stag. He's also saying glad that I'm feeling better, which I'm really I really appreciate it. But this is really what I wanted to talk to, which is his honest opinion about MPW, which is one of my holdings, and I am down a lot. So all right, so his comment goes this way. Sometimes when you are in a hole, the best solution is to quit digging. MPW will have a lot of debt that they will have to renew in the upcoming years, 1.4 billion now through 2024 alone. In years 2025 to 27, they will have to refinance approximately $5.6 billion. They have a junk credit rating and will have to refinance at 9 to 11% interest rates, which is not good at all, especially for their dividend, because that means that a lot of their cash flow is going to have to go into the interest rates, and this is what he means right there. Their debt maturity scheduled through 2027 is terrifying. Yale is renegotiating their deal on 3 hospitals for a cheaper price. They could even withdraw from the purchase. It is probable that Stewart and Prospect, their largest tenants, which is Stewart is the one that has been giving him some problems as of lately, and that's why the price has been going down. And also Prospect, pretty much. Those are 2 of the reasons why could go out of business. So if they go out of business, that's not good. But hopefully, maybe they another company will take over, since these hospitals and it's needed everywhere. It's definitely something that is needed. Hopefully, a different company will take over if that happens. Could MPW double? Maybe, which is very good. Maybe. Could MPW fall to less than $1 per share? Maybe. It's true. The stock market is very unpredictable, and you never know what it happens. Could MPW declare bankruptcy by 2028? Their credit rating seems to indicate that S&P, Fitch, and Moody's thinks there is a realistic possibility that Medical Properties Trust could go bankruptcy eventually. A BB credit rating indicates that MPW has a 16.7% chance of complete bankruptcy over the next 5 years and a 23.5% chance of complete bankruptcy over the next 10 years. Let's look at Realty Income, which is definitely one of my favorites. They have an A credit rating from the S&P. This means that the risk of Realty Income going bankruptcy over 5 years is only 0.4%, which is awesome. I like that you did all this research, Randy. I really appreciate it. I looked into medical properties, and every investor is different, but I personally don't want to take the risk, which I definitely understand 100%, Randy. Not when there are nice companies like J&J and KO, or an ETF like SCHD near 52-week lows, which I agree 100%. I hope this didn't make you mad and not financial advice. Randy, I do want to say right here, in front of everybody, I am not upset at all. This is your opinion. You did your research, which is awesome. Also, you came up with numbers. I will not be upset. I have, thanks to my work experience, I have a thick skin, so I don't get mad too easily or upset too easily. I'm always able to handle certain situations. But I am really not mad. This is your opinion. This was your research, and definitely I really, really appreciate it, Randy. And I'm really taking that advice that you're giving. I know it's not financial advice. I know it's just your opinion. I like your channel and think you're a nice guy. I just wanted to let you know the facts that there are real risk and literally you could be wiped out entirely of your MPW position over time. You mentioned Visa in several videos, and I honestly believe that Visa will outperform MPW. I do think I do have to agree with you on that one. I did mostly invest in MPW for multiple reasons. Of course, when I did my research, I thought the real estate market was going down, so that was one of the reasons why I invested in it. I'm like, it's going down. It's in the healthcare sector. Hospitals are very much needed. I knew that they were going through some tough times, but I thought that they will come out in the future, and hopefully they will. Hopefully I'm still not wrong on that. If we take a look in Seeking Alpha, let's go to MPW. Whoops, what is this? Why isn't it taking, why isn't it changing it? So right now, MPW, it closed today at $4.08. It's like really, really low. Right now at the 52-week range, it's like at the very bottom. So right now you could pick it up at a very, very low price right now. But when you expand it in the max, I know they have had this crash in the past, in 2009, I guess in around the 2008 market crisis. They took a very big dip, just like a lot of other companies, and they were able to outcome the market. So they were able to come back, and that's what I'm hoping for, that they will come back in the market. So, and I could go on and on in the video and continue to review this stock, but I did not want it to take too long. But I did wanted to review Randy's comment, which is awesome. I do really appreciate it, Randy. Now let's take a look into my dividend portfolio. So my dividend portfolio right now, it is down $762. Everything is in the red. I am not getting nervous, not yet. I am gonna sell my position in Stag soon, but not yet. I'm waiting a little bit, and then I'll definitely share that with you guys. All right, guys, please let me know your opinions in the comment section. Do you guys like this kind of videos also, me reviewing your comments in here, or if you guys mind and you guys don't want me to, I definitely understand that also, but I just thought it would be nice to do so. I really appreciate everybody's comments. Please share your comments. Definitely be sharing my opinion also. And I'll definitely see you on the next one. Please don't forget to hit that like button and subscribe to the channel also. I really appreciate it very, very much. All right, guys. See you on the next one. Bye. Disclaimer, I am not a financial advisor and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.